If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Welcome back, Injective family. In today's update, we're going to discuss this 848% move to $82, how we also believe that this will not be the bull market top, and how we believe it will be higher, and we'll show those specific targets. I'm also going to show you how far down we are allowed to dip, and this would still be considered bullish. And if that's what you're interested in hearing about today, please also do like, subscribe, comment and share, as we're less than 100 subs away from 7k. If you're a person that wants to get educated by me, use the links down below to message me on Twitter for a discount promo code that will last until the end of this month on my ebook, mentorship or course. I've also got a Discord community where we've had a massive influx of students over the past few days. And again, on Tuesdays and Thursdays, we do live group mentorship calls where I teach you how to trade exactly like me. It's just up to you if you have the discipline, determination, and consistency. More questions? Message me on Twitter, links down below. Now, Injective is on its way to $82. And in order to continue to that target, we can afford to see a 48% dip. Why? Because this pattern's target of 850% became valid on the break of this neckline of this inverse head and shoulders pattern. Now, the technical target sits at $82. However, this is not a suggestion of the final bull market target. This is just a suggestion of the breakout of this bullish pattern. It took the whole bear market and this reversal over here into a bull market to actually form this pattern. So it's a very significant one. It would mean at the point of reaching this target that we've, had already experienced a lot of gains since its low. Look at the price down here of $1 and it's achieving an $82 price over here. So there were gains to have already been made, but as that's the only chart pattern on the chart right now, we can only suggest this target. The only way to get targets beyond this point is not by patterns. This is the best pattern. This is the highest target out of a pattern. However, it doesn't mean that it's the final target, because what we want to use to find bull market targets are Fibonacci's, going from the bull market top to the bear market bottom, break through the golden pocket, which is this area, to validate these higher up targets, which we'll get into in a second. So that's why it's important at all costs to hold above this neckline. Why? Not only to keep this target valid, but to keep potential targets further up higher valid. Why? Because the neckline was also in line with this golden pocket, which is the level that has allowed those targets to become valid. So we have multiple confluences suggesting that we should eventually get up and meet this 850% move target, because we've created the reversal wave by failing to put in a lower low from this point and actually put in a higher low here on the moving averages and breaking through. So that's why, as we haven't confirmed its support, it would be totally fine to come down to there. That would be roughly a 50% move down. As long as it does hold as support, we would continue higher, but we don't actually need to go down as low as that. We just know that is the lowest point that is allowed if we want to continue up to those targets. Why? Because it's the neckline of the pattern, and you must hold above the neckline of the pattern to keep the target valid. But also, we've created the reversal wave on the golden pocket. So once that's done, it means you validate those higher up targets. And so at all costs right now, you must continue to maintain above that level. And as this is our most recent low over here, we need a higher low above that point. And I think that the lowest point that would be at is exactly on the previous resistance, which is the neckline of the pattern, as well as the golden pocket. So multiple things suggesting that it's actually totally fine to come down and see a 50% dump, and we'll still continue higher. But I'm here today to tell you that we don't actually need to see a 50% dump. If it does come, amazing. We were able to put that in the back of your minds and remind you that that is a possibility and it's totally fine to happen. But just before we actually scale down to the lower time frames to show you more specifically the shorter term levels that need to hold within this tiny range over here in order to continue to our all-time high, we'll get into that in a second when we scale down to the lower time frames. But let's look at potential bull market targets. I do believe that as Injective is pretty much really close to the $82 target, that this is nowhere near going to be the top. We're going to go and surpass this for sure. But again, remember how I said that at the moment this is the highest target out of a chart pattern. What we now need to see develop is potentially after this pattern's met, we need to see a very large correction. It might come before the target, it might come once we meet the target. Whenever it does come, it's going to give us a big dump, whether it's from here, whether it's from here right now. We need a big dump, just as we used the fibs from here to here to gain these targets, which are acting as confluence with the actual inverse head and shoulders breakout. We need to see a huge dump in order to gain new chart patterns and use those chart patterns, necklines, and gain a target so I can get you more accurate, more specific levels. But as of now, what I can suggest is that we are looking, as we have created the reversal wave, at all of these targets over here. Let me now just move this for a second. So we're looking for targets between $65 and $200. I really do believe that $200 is more than likely going to happen. Why? Because the first target down here, we've already got a technical target out of a chart pattern suggesting that it will get up higher than that point, and it's $20 off this, so it's more likely they're not going to hit $100. And we can see already from today's current price, getting up to $100 is not even a 500% move. And there's coins with much higher market caps than Injective, where you are expecting more than a 500% move already. So this is definitely going to surpass that. You can see over here that getting to the 1618 would only be a 10x. Now, of course, that would still be considered a low market cap, even though it's sitting at $1 billion right now. They only take us to what, 10 to 15 billion market cap, and we've got coins that people are in. Best example is XRP. People are holding XRP. It's already in the $33 billion mark, and people are still thinking it's going to 10, 20x. So if you think that's going to 10, 20x, then Injective is going to surpass this clearly. So we are looking for Injective to top out higher than $200. However, we don't have chart patterns at the moment. We don't have huge dumps at the moment, giving us more specific targets to the upside. Why am I saying this? Because if we actually look at the next 3 sets of targets after the $200 area, it's at a very significant increase, and that's why we would need to wait for dumps in order to get the higher up targets above $200, because you can see there's a $400 gap between these 2 points, a $460 gap between these 2 points. So we're going to have to wait for a dump. I'm going to show you what I mean. So let's say we dump from here to the 1 fib level. Can you see it's now giving us targets below the 666 area, but actually above that $200 area, between 250, 340 and 400. And that is why we need dips along the way up. We need chart patterns forming along the way up. So for example, if we top out here, come down and form a double bottom over here, that will have a neckline, of course, that would have a specific target, but we could then also use the fibs, and it would say, okay, yeah, we are actually looking to top out before $666. I think that our top will be between these 2 points, not necessarily that or even higher. I might be totally wrong, guys, because if we're looking at percentage gains, I bet some of you will say it's achievable, 40x. But let's wait for more specific dips to actually come, just as we're able to now tell you that $100 to $200 is going to be met. How is that? How was I able to get these targets? I needed this chart pattern of this inverse head and shoulders to actually form in order to do so. I guess another way that we could actually get some targets before the $666 is actually going to the left shoulder over here and taking it down to the head. So the left shoulder is just right there, and take it down to the head, and it's actually showing us some targets at $260 and $550. So it could be that we do top out before the $600 mark, in between $206, $600, as you can see over here. That is it from me today. Hopefully you found a lot of value in today's update, the explanation on how we have validated those targets, how we're actually able to see a 50% dump and be totally fine, not that we actually have to. And then let's now finally end this video off by scaling down to the lower time frame. So make sure, if you haven't already, to like, subscribe, comment and share. It really does help the channel grow. And again, we're 100% 200 subs away from 7k. And also, if you want to get educated, I will play a little clip at the end of this video on what I do have to offer. But again, if you want the discount promo code, use the links down below, navigate to Twitter and private message me there for more information on the discounts. Now, what we are seeing over here, and I love to see this, so we created this large wick initially. What I'm going to do is draw support over there, and you can see that we actually went below it, but we never continue to the 200 EMA. You might question this, because usually when we lose the 55, we continue to the 200 EMA. So why are we not seeing this over here? Why did it reverse and then reclaim the moving averages, which is a suggestion of bullish momentum has now stepped in at a key level of support over here? So usually we'd expect this to dump and continue to this level unless bullish signals appear before this point. And when we've seen and created this low with this wick, if we want continuation lower than this, if we want lower lows, yes, you can see here, one body is here, next body's down here, that's lower lows. However, if you want true lower lows, as you can see, the wick is down there. I need to see this lowest body closing below this wick, and then we will actually continue lower. During this red candle, we were below it. So if it had closed there, boom, that's a breakdown. We're going to the 200 EMA. As we closed above, it's showing you that this is a key level of support that we failed to lost. That is not a downtrend, so we're not going to continue to the targets. In turn, we created this double bottom over here, which broke back above the moving averages, showing to you that this is bullish. And then what we need to do is then use the fibs for targets to the upside. And we can currently see that the most important level to hold is not only this low, but this higher low over here, on the golden pocket, on the moving averages. And again, as I explained earlier, by breaking through the golden pocket, which we have done over here in tested 786, now can we just confirm it as support, as we've just formed a bullish cross, as well as already breaking out of the golden pocket and just coming back to it as support. Hold this $16.65 area, and we will continue to the previous all-time high, which is this level right here, now a technical target if we can hold this lower support. So we've got these explosive moves ahead, everyone, for Injective. As long as it can now maintain the golden pocket that we are now within and the moving averages, we're expecting a 60% pump in the coming days and weeks over on Injective, as long as $14.70 holds and $16.60 holds. Thank you so much for tuning in. Hope to see you joining the community, more of you joining the community and becoming educated, so you can do this exactly like me and not have to rely on when my videos do come out. And that's pretty much it from me today. Like, subscribe, comment, share, and I'll catch you in the next one. Cheers, everyone. If any of you are interested in learning how to trade just like me, there's multiple options. Click this ebook. It covers all the strategies that I use in these YouTube updates, so you will have all the same skills. Covers the Japanese candlestick, chart patterns, support and resistance, why I use EMAs over trend lines, Fibonacci's, divergences, and again, using these all together to profit using them. I've also got a discount on my course at the moment, which ends at the end of this month. So that's down to £100. You also gain free access to my Discord community for the next 3 months, where you can expect to be a part of 12 to 24 group mentorship calls. If you want something that's a bit more personalized to your needs, then join my one-to-one mentorship plan. You can choose 5 or 10 hours of my one-to-one help, and included will be the 3 months free in the community, as well as my 6-hour long video course.